Morning guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look across markets. I'm going to be giving you a quick update as to what's been going on this week, what the key developments have been, and what developments we have coming up that could affect sentiment. So let's jump straight into it. You can see here I've got the S&P 500, or a CFD that tracks the S&P 500, and looks like we're on course for a third successive day in the red. Slightly paring back on this pretty impressive rally that we have seen since the October lows. Why are we seeing this slight paring back of recent optimism? Well, let me show you the calendar, because basically we've had some US jobs data, not the official jobs data, that's out on Friday, and that will be very, very important. You can see that's being released here on Friday. But we've had a few sort of second tier US jobs data releases, you could say, that have been very strong. So yesterday we had the JOLTs Jobs Opening numbers, which unexpectedly jumped to 10.7 million at the end of September from 10.28 million at the end of August, at the end of October, sorry. No, at the end of, excuse me, at the end of September. Against expectations for a decline to 9.75 million. So demand for labour still very, very strong in the US at the end of the third quarter. And then today you had the ADP non-farm employment change, which is ADP, they're a payment processing company in the US. They every Wednesday, before the first Friday of every month, on the Wednesday that comes before that Friday, pretty much 2 days before the official non-farm employment change number from the US government, ADP released their own estimate based on their internal sort of payroll data. And that was a little bit stronger than expected, 239k jobs added in October, according to them, above the expected 178k. Now, I mean, ADP has had a mixed track record since the pandemic of getting this number right. So people shouldn't probably pay too much attention to that number, but it's robust. That's the main thing. The US labour market, according to ADP, still humming along at a nice pace. And it sort of strengthens the idea that, look at this, non-farm pay, the official non-farm employment change numbers expected at 190k. And if ADP is mid 200s, then you're probably going to think that yes, this official NFP number should be pretty robust in the 200k area as well. Why is this important? Well, I mean, the Fed, who have said they're data dependent, really what they want to be seeing, if they want to see inflation coming back to their 2% target quickly, then they're going to need to see a bit of weakness in the labour market, which just isn't showing up yet. So all this speculation about a dovish Fed pivot, people have been talking about how the Fed's going to slow the pace of interest rate hikes to 50 they're going to do 75 basis points later today, and then they're going to slow to 50 basis points, and then maybe 25 basis points, and then maybe pause next year. Well, it's like, if the labor market's still going so strong, makes it a little bit more difficult to make that argument. But anyway, that's why stock's coming under a little bit of pressure today. But like I say, we've got the Fed meeting coming up. You can see we've got the statement, the interest rate, which is expected to be lifted by 75 basis points to the 4% area, which is very restrictive. The neutral interest rate's estimated somewhere around 2.5%. So yeah, taking it well into restrictive territory. Then we got Fed Chair Jerome Powell's press conference, which will probably be the most important, well, almost certainly will be the most important aspect of this decision, because people want to know about this dovish pivot. They want to know about the outlook for further rate hikes. Are hikes going to be slowed? How is the Fed viewing the economy at the moment? Because there has been growing evidence of a slowing US economy. But then again, like I say, we've got the good labour market still, and we've still got very, very hot inflation, particularly core inflation, which should keep the Fed, I think, hawkish. I think the potential for the S&P 500 to fall back below this 50-day moving average is very much there. But we'll see. Let's have a look at a couple of other asset classes, shall we? What's that going on there? You got the Dixie consolidating just above its 50-day moving average here, just around 111. You've got Euro dollar also around its 50-day moving average, just above zero, just below 0.99. You got cable just below 115. Everything really in consolidation. You got the yen a little bit on the move, strengthening quite a lot. There was some missiles fired from North Korea that were sort of fired a little bit more towards South Korea than it has been normal, and the yen does tend to benefit when there's geopolitical tensions between North and South Korea. Obviously, it's a safe haven; it's a regional safe haven, but still well within recent ranges. So that's the FX market story. Just waiting for the Fed really, and then you got oil also sort of consolidating a little bit. In fact, I kind of like, let me move that a little bit so I can draw this properly. Oil forming a bit of a pennant, if you ask me. First time I've noticed that. I didn't notice that earlier. But yeah, a little bit of a squeeze, you might argue, going on in the oil price, which could eventually lead to a bit of a breakout. I mean, I would favour a bearish breakout given the current macro backdrop of slowing growth. Although there were some rumours about China potentially moving away from its zero COVID policy, which could be bullish. So that could, if that does turn out to be true, I mean, we could break back into the 90s on that. But just something to be looking out for. Let's just quickly look at the calendar then. So, like I said, we've got the Fed coming up. Tomorrow, Bank of England also expected a 75 basis point rate hike. ISM Services PMI out of the US expected to be strong. US service sector seen as still humming along very nicely. But any weakness in that could potentially be taken as good news from a market that's hoping for a dovish Fed pivot. Although, if we don't get that dovish Fed pivot on Wednesday, then it's like, how much do we really care about the ISM data if it's weak? If the labour market data and inflation data is still hot, and that's what the Fed's more focused on. And then obviously on Friday, we've got the US jobs report, Canadian jobs report as well. And then all the way along, there's like a smattering of central bank speakers like Lagarde on Friday, some Fed speakers Friday, Bailey, obviously in the post BOE press conference, Lagarde again, RBNZ Governor Orr. So a couple of things for, at least for currency traders, to be keeping an eye on. Hope you enjoyed the video, guys. Hope it was informative, and I'll see you all in the next one.